Hi there. Did you know that even after 3 or 4 years, the Canada Revenue Agency can still reassess your tax return? That's right. Most business owners assume that their tax filings are final after the standard review period. But in some cases, the CRA can go back 5, 10, or even more years if they believe that there was a misrepresentation due to neglect, carelessness, or even intentional wrongdoing. And if that happens, you could be facing gross negligence penalties. Now, I know tax laws can be overwhelming, and as business owners, you have a lot on your plate already. So in this video, I'll break this down in simple terms when the CRA can reassess, what gross negligence really means, and most importantly, what you can do if you are in this type of situation. Hi, I'm Aman, a chartered professional accountant, and I help small business owners navigate tax planning, cash flow, and compliance so you can focus on running your business. So let's get into it. How long can the CRA normally reassess? You see, under the Income Tax Act, the Canada Revenue Agency generally has 3 years from your notice of assessment to audit or reassess your tax return. And for the GST or HST under the Excise Tax Act, the period is 4 years. Now, for most taxpayers, once this window closes, the return is considered final. But there are exceptions. When can the CRA reassess beyond the normal period? This is the main question. If the CRA believes that there were misrepresentation due to neglect, carelessness, willful default, or fraud, they can reassess any time, even going back more than 10 years. Now I know you might be thinking, but I didn't do anything wrong. And that's exactly where things get tricky. Even if you did not intend to misreport your taxes, the CRA might claim you should have known better. And that's where gross negligence penalties could come in. Now, you might be asking, what is gross negligence? You see, the courts have made it clear. Gross negligence is not just an innocent mistake. It means there was a high degree of negligence, where the taxpayer was indifferent to whether they were following the law or not. In a key case, Winter versus the Queen, the court explained it like this. If the willfully blind taxpayer knew better, the grossly negligent taxpayer ought to have known better. In other words, even if you did not intentionally file incorrectly, if the CRA believes you should have taken better care, they can still penalize you. How can you defend yourself in this situation? You see, if you receive a reassessment notice beyond the normal period, here's what you should do. Number 1, prepare a strong objection before it escalates to tax court. You might have the right to object to the reassessment. This is your chance to present your case and provide supporting documents. You could also consult a chartered professional accountant or a tax lawyer. A CPA with experience in tax disputes can help you understand what evidence you need and what you need to prepare a proper response and guide you through the objection process. This can make a big difference in negotiations with the Canada Revenue Agency. What you don't want to do is assume that if you just explain things casually, it will all work out. The CRA looks at facts and documentation, so having a solid case is crucial. Final thoughts. I know dealing with the CRA reassessments can be very stressful, especially when you're already busy running your business. But the best way to protect yourself is to file correctly the first time, keep proper records, and seek professional advice when needed. If you have any questions about Canada Revenue Agency reassessment or penalties, please feel free to reach out. And if you found this video helpful, let me know. I would love to create more content to help business owners like you navigate tax challenges with confidence. Thank you, and I'll see you in my next video. Bye.